Chit Chat Stocks. This is our weekly Power Hour episode. I am joined by the one and only Brett Schaefer. My name is Ryan Henderson, and today we're talking all things financial markets. Earnings season has officially kicked off. We got Netflix, who's always kind of the leader for earnings season. They're the one that really gets the ball rolling. And they actually had what looks like a very good report. Stock jumped quite a lot, so we'll dig into that. We have some big news out of one of Brett's largest holdings, I believe. And we got plenty of other topics to get to as well. We got an interesting small cap of the week and some other stuff. But before I do, Brett, how are you? How is the kickoff to earnings season?
It's going well so far. Watch list is soaring. Stuff like IBKR seems to be doing well. We're going to be talking about them today. Although nothing I own has, I guess, reported yet. Some interesting financials out there. Netflix is okay. I don't think Netflix, it's not a battleground stock anymore, so I don't think it hits the same as they used to. They used to be a huge just anticipation there, but the stock is doing quite well. I'm interested in talking about Project Stargate. Did you see this, Ryan? Are
No.
you aware? Okay, well, we're going to learn all about that. And of course, along with your weekly topic, the small cap of the week, we have my bubble watch, which got a couple on the docket this
There
time.
were some huge ones this week that
Yeah.
maybe sign of the times kind of just yeah, there and actually I've got one for you as well. That's kind of a sneaky one. I don't know if it really qualified, but we can talk about that in a second. Before we do though, I want to mention our friends at Public. If you're serious about investing, you need to know about public.com. That is where you can invest in everything: stocks, options, bonds, crypto. They even offer some of the highest yields in the industry, like the bond account's 6% or higher yield that remains locked in even if the Fed cuts rates. What sets Public apart is how they give you the tools you need to make informed investment decisions. Their built in AI tool, Alpha, doesn't just tell you if an asset is moving, it tells you why the asset is moving so you can actually understand what's driving your portfolio's performance. Public is a FINRA registered, SIPC insured, US based company with a customer support team that actually cares. Bottom line, your investments deserve a platform that take them as seriously as you do. Fund your account in 5 minutes or less at public.com/slash chit chat stocks and get up to $10,000 when you transfer your old portfolio. That is public.com/slash chit chat stocks, paid for by Public Investing. Full disclosures in the podcast description. Brett, where are we starting?
Well, maybe we should do a little announcement. You moved because it doesn't matter, but you are in the state of Texas. I think it is funny that the winter weather followed you down there. You went for the sunny weather, and for the first week, they had one of the random snowstorms. Well, as you mentioned, it might just be a dusting, but they called it a storm uh, that they have every once in a while. So I'll just give a little PSA. Anyone in the Austin area, I'm sure there are listeners, people on FinTwit or whatever, hit up Ryan. He's probably dying to find someone to talk about investing with. That's not
True.
me.
Yeah, no, I 100%. Yeah, if you listen to the show, you're in the Austin area or even in the Texas area because we are moving, we're kind of exploring other cities as well. Give me a shout, and if we're close, I'd be happy to connect. I do. Maybe we can start with some of my anecdotal evidence because
Let's do it.
I had a long journey down to Austin. It was a 3-day drive, and there were a couple things that really stood out to me. First of all, uh, Texas Pacific, Western Texas in general, just oil rigs, like one after the other. Texas Pacific Land Corp, which I believe just owns like pretty much owns West Texas, right? Don't they just like own the royalties on the Permian Basin?
I don't know. I'm not very aware of this company.
They have like 80% margins. Apparently, they just own the land. They get royalties from the oil companies that come in and do the drilling, which I guess that makes sense why they have 80% margins. It kind of surprises me that they don't have like 100% margins. I'm not sure what you really need to do other than own the land. But yeah, pretty much the entire Permian Basin is just oil rigs. The other part that I wanted to, or sorry, the entire West Texas. The other part I wanted to mention: Dollar General and Family Dollar. Those. we talked about this with Alex Morris, but there's a slogan, or I guess something that they've said before, which is "We went where they ain't." They are in seriously some of the smallest towns I've ever seen. It's like towns that have nothing but a Dollar General, which it kind of makes sense why they have sort of that logistical advantage. Like, I would be surprised if at any point they really had competitive threats in those towns, in some of them, where like Walmart is not putting up a store
Timu?
that close.
Come on. Timu's
It,
coming.
I I got a feeling even Timu doesn't deliver there. Like these
Yeah,
are
they'll run some negative 80% unit economics, but that doesn't even pass their threshold. Yeah, I always think it's funny that you never believe in a thesis or anything until you experience it with your own eyes, which maybe it's a good thing to do, but yeah, you were like, I had to see with my own eyes, West Texas, lots of oil. It's like, oh yeah, we've been reading about it.
yeah, yeah, seriously. And then the last one I'll mention, maybe there'll be more as well throughout the show. Texas Roadhouse, publicly traded restaurant stock, and I believe it's the financial performance has been really strong. They've had great restaurant comp sales. They I went to one, and I live in the suburbs of Austin. Went there, hour and a half wait. This place was popping. And now I
Nice.
don't love like I don't mind quick service restaurants because there's kind of a logistical element to it. You can differentiate yourself, your throughput really matters, and you can kind of create advantages that way. But restaurant concepts generally I don't love. Kind of feels like retail. It can go out of favor, go out of fashion pretty quickly. Uh, but yeah, it certainly passed the eye test, and the consumer or the anecdotal evidence barometer was kind of at the peak there. So looked like a pretty interesting concept. I might do a little more digging on the stock. Any anecdotal evidence you've had lately?
Ooh, I mean, Bubble Watch. Yeah, I don't wanna I think I mentioned last week my roommate who made all the money in the meme coin. He put it into Trump coin, and he
Smart. Got to
said,
parlay those
"Sell."
winnings.
Yeah, I know, he said, "Sell during the inaugural address," which I actually think worked. So, he might be our new crypto analyst. We'll keep updated on that, but I think that's a sign of the times. The crypto and gambling stuff is back in the mainstream. Maybe not as aggressive as early 2021, but pretty darn close now. And that's really all I got.
Yeah, it's so I have not followed this Trump coin that closely, and I can't think of a more obvious one to report on for Bubble Watch, but I did see at one point it had a market cap greater than like pretty much most of the Russell 2000. Like there was like 3 companies that were still larger, which here's we talk about this all the time, but oh my god, what a waste of resources. Like
Yeah, yeah.
what a waste of capital.
Yeah, I know. If once everyone becomes crypto millionaires, there's going to be nothing to buy because no actual physical production of goods and food and services are ever going to be done ever again. Yeah, I mean, but that one's not even the largest one. Can you give a prediction, no, a guess, not a prediction, on what Dogecoin's market cap is as of this recording? I'm looking at it right now.
Oh gosh. I kind of don't want to cuz I don't want to know it, but let's go 100 billion.
53 billion. So much larger than Trump coin.
I thought
And
Trump coin got up to 70 or something like that.
maybe. I was reading something in the Wall Street Journal that it was 8, but maybe it was
Man.
up at 70. Who knows? I don't even know where to look at the charts on some of these things. Let's talk some earnings. We got a lot of stuff we want to discuss, some serious investing topics. Why don't we kick things off? Everyone's favorite company, the one that I think David Gardner, one of our favorite investors, may have had a 100 bagger in a single day after today's trading. Netflix earnings. Ryan, how was the report? Why is the stock up? Let me check right now. Stock's up 10% today. Why is that?
Yeah, to go through some of the numbers, Netflix crossed 300 million total paying subscribers. They added 19 million subs this quarter, which is its largest ever net addition in a single quarter. The Now the content slate was strong for Q4. They had the Jake Paul fight, they had Squid Game season 2, they had NFL games. So
Are you in on the sports content now for streaming? In or out? Because it seems like the unit economics are okay.
I'm a little mixed. I'm a little mixed. So they're okay. If you have a wonderful catalog of owned content to like conjoin sports rights with, then yeah, that I think it makes all the sense in the world. Um, Here's a quote from Ted Sarandos from the conference call. He said, "We are thrilled that some folks came in for the fight and some folks came in for the games, but they stuck around for Squid Game and for Carry On and for Black Doves and for Six AAA. I don't know what all these are. And for Nate Bargatze's new comedy special. Basically, he's saying they stuck around engagement wise with some of the other content. Now, I don't think we've had enough time to really figure out whether or not these people are going to stick around for months or they're just like, okay, I've got the subscription for a month. I might as well try to watch all the other content. So I think we got to see it actually trickle through like next quarter, see if net additions are still really positive. If these people do stick around and they can draw a wider audience with these events. Now, these events, if this made up the majority of their engagement or usage, or whatever, it would probably be detrimental to margins. Like you don't want to be purely a sports licensor or a sports producer. But if they are drawing them in and hopefully keeping them as subs, this seems like a wonderful strategy, right?
Yeah, yeah. Oh yeah. I'm in on the yeah, you have to have it. I mean, it's becoming an increasing part of the pie. More of the traditional stuff is just going to the YouTubes and the social medias of the world. The podcast. Think about it. Show like us, not that big. There are, I think, what is the number? Thousands of hours spent each week, people listening or watching our show, and we're nothing compared to some of these other things. So yeah, you need sports. The unit economics might be harder, but you definitely need it, especially with Netflix, given their size. If you want incremental ROIC, or sorry, if you want to invest incremental capital, I think you're going to need to do it. And gaming, yes, that video games, that also is an opportunity there, but it's going to be much harder for them. And this is, I think, along with the advertising, and they kind of conjoin together. These are the near term targets, things, segments they can invest in and get, I think, what we're seeing a decent return on invested capital, especially because they're a streaming only player that doesn't have to worry about these linear channels.
Let me run an idea or a proposition by you. The year is 2030. Over under a let's go 2035. Over under a billion subscribers.
A billion?
Here's what I'm thinking. Here's
Uh,
what I'm thinking. Are we
maybe.
underestimating the Netflix's like addressable market? Because it, them drawing in this many people with some sporting events, it's kind of, we think about, oh, there's competition throughout streaming and well, the streaming market broadly, but they are adding, okay, we talked recently about Hulu Plus Live TV is combining with Fubo, and combined, they have like 7 million paying subscribers. So they added three of those in a single quarter. Like
Well, yeah, with much
globally,
lower ARPU, but sure. I get what you're saying.
globally, are we going to be able? Do you think they're going to be able to get? It'll be at different price points in different markets, but could they reach that eventually?
You got to tell me what the per GDP per capita of Asia and Africa are going to be. And maybe Latin America a bit, but Latin America still has a sizable presence on Netflix. I think they talk about it in the report that there's, I think, 750 million broadband households, excluding Russia and China. Most of that right now is North and South America and Europe. But there's a big opportunity out there with many more people around the world. Sure, I think they could do it. The question is, what's broadband internet penetration going to be, and how rich are some of these countries with a ton of people going to be? I don't know the answer to that, but I do know that there probably still is a decent runway left to grow.
They
I'm not
also
subscribed though. Honestly, I'm out.
really,
I don't have what am I on there for besides
I don't
unless
know,
my local
but
sports
people
team
say
is
that
watching
all
a
the
game.
time.
Yeah.
People say, "Oh, Netflix is dropping the ball on content." They just keep subscribing. I'm one of those people. We got a family account kind of thing. They said, in terms of engagement with multi account or multi person accounts, they're getting more than 700 million people using the platform.
Yeah, is an average usage 2 hours per day. Yeah, it's background stuff for people to watch, I guess, is probably what including that 2 hours per day. You have to sometimes look at the anecdotal evidence and look at what you yourself are doing, and in my case, maybe I'm just a unique situation where I'm mostly just a sports watcher, and then, I'm not watching much other TV because I got other things to do in my life, but for someone that's not, maybe Netflix is there. Yeah, and look, that's not something that needs to be litigated, the data's there, their usage keeps growing. Um, Stock's been incredible. Is it expensive today? Yes, but is there any reason to sell if you are a long-term shareholder? No. I mean, they keep executing, they have an amazing culture, and they're competing with some of the worst managed companies on this planet.
That's true. Okay, let me propose another question to you. Let's say they lean into these events more and more, these fights, these games, sporting content in general. They whatever the roast type of stuff that they've done. Do you think operating margins still exceed 30% in 5 years?
I think it all comes to increasing scale with new markets. It doesn't matter how much those subscriptions cost if they're watching the same things. I really don't know.
They did
But
hit they hit record operating margins this year. They're forecasting, I think, between 43 and 44 billion, somewhere in there, revenue next year. So yeah, the quarter was good across the board. It's no surprise the stock is up more than 10%. To David Gardner, if this was a 100 bagger on your cost basis in a single day, that is quite the feat. Can't say that I've ever
yeah,
seen that. So congratulations.
I think his cost basis is $1 and okay, well the stock at the open it might have been, but it's up 86 points today, and I think his cost basis was around $1, so not necessarily there, but I think he's gonna be sleeping quite well tonight.
You know, who also had a wonderful call on this was Alex Morris, a friend
That's
of the
true.
show. He has done great work on Netflix. And I wish I would have relied on him a little more when things didn't look so good. It's amazing to think that they had really a one quarter slowdown that presented like one of the best one of the best buying opportunities in big tech, if you want to call it that, of the last 5 years. Um, and it just goes to show that even like wonderful companies that have grown 20% a year for 2 decades will still stumble every once in a while, and that tends to present pretty good opportunities.
Yeah, and it kinda kicked them into maybe it helped them a bit because they're like, "Okay, maybe we don't need to be so stringent about not advertising and not getting into sports and not doing some of these things." And now they're on a new runway and similar to it's not as big of a difference as switching from the DVD mailing service to streaming video, but this is another switch or another evolution in their business model that they seem to be executing flawlessly. And I think if you are anyone trying to learn how to be a business leader, you should study Netflix's culture because it's different, it's unique, but it works wonderfully. All right, IBKR earnings, Ryan. Should we talk about
Sure.
them? Another
One
watch list stock that we've had, I believe, someone pitch on the show before. Luis Sanchez, who I know has been following the stock, who runs. Oh, do you know his fun name? I should really
LVS Advisory.
LVS Advisory. Check him out. I believe he has publicly available report on IBKR. Came on the show. I think the stock's up like 300% since then. But I'm going to get into it. But you may have had a follow up before we do that.
I was just gonna say rest in peace to Netflix's paying subscribers KPI. They are retiring that, and they're going to do
Yeah.
a biannual engagement report, which is just the biggest bummer.
I know the FinChat charts are going to struggle. It sucks. It sucks.
I
But
guess,
maybe
yeah.
we'll toss out some good ones for IBKR here. They have some very interesting data. I
Yeah,
don't know
let's
if you
go
want.
go through the earnings a little bit, and I'll pull up some charts.
Okay, so again, I'll shout out some of the long-term bulls here. Luis Sanchez, again, been on the show before. We should have him back on. IBKR, if people don't know, it's international, and no, excuse me, interactive brokers, but it is I'd say more than any other U.S. brokerage. It's focused internationally. It's focused on offering all sorts of assets, stocks, bonds, whatever, to individual investors, while also catering to professional hedge funds and things like that. I'll say that the two accounts that I use is one, our sponsor, public.com, and second, IBKR. I switched from Charles Schwab to IBKR because they have a much better offering. And it looks like, given that their customer count increased 30% to 3.34 million here last quarter, a lot of other people think the same. Let's go through some of the stats. Commission revenue up 37% to $477 million. Net interest income up 11% to $807 million, and customer margin loans increased 45% to $64.2 billion. We had a question in the comments here about our thoughts on the high amount of margin reported by brokers. I th- I think I would say that's what we would expect right now, given the animal spirits in the markets. And from what I read on their conference call transcript, they are seeing increased usage of margin, which I think is just to tell that people are getting increasingly confident in their investing skills. And Mr. Market, we've been there, can come back to bite you on that one. Here's my question for you, though. I know IBKR is not overly expensive right now, or doesn't look overly expensive, and maybe I'm letting the stock chart talk to me. But I do think that these brokerages benefit a ton in bull markets, and you kind of have to normalize earnings. They can be cyclical, along with how the stock market is doing. Is this the perfect stock to buy during a market crash, during a recession, Ryan?
I'd say yeah. I mean, they run so light. They like generate good margins even in bad times. I so yeah, a stock crash. This seems like one that's just poised to benefit when things ultimately turn. I wanted to show you this chart and see if you thought this was a potential bubble watch indicator.
Options volume? Oh,
Options contract volume grew faster year over year than any point since 2021, sort of the peak of the last bubble.
yeah, we're in the gambling economy. Everything's everything's gambling, Ryan. And I think fading that will do wonderfully for people over the next, people that are focused on the 5, 10, 20-year periods and even longer for their portfolios. Don't dabble in the daily option contracts. I was reading, I should say, a shout out to the podcast we did with Alex Morris. He has a kid less than 1 years old and or younger than 1 years old, and took the time to come on the show and talk about his new book, Buffett and Munger Unscripted. Go check that one out and go check out the interview posted. Should be the second one right below this one in your podcast feed. And why I mention that is in that book, which he compiles a lot, all of essentially the notes, transcripts, and stuff like that from Buffett and Munger at the annual meetings. Munger talks a lot about not incentivizing gambling, not incentivizing poor accounting. And I just thought, man, he would be aghast to what is happening today. And I tend to agree with him. We're kind of, I wouldn't say anti, we're very skeptical on Chinese stocks, Ryan, and on what the Chinese Communist Party will do to businesses and potentially the uncertainty there because of they can kind of do what they want. But one thing I do agree with them on is that they decided to nuke the crypto industry. Seems like
Yeah.
something it's better for society long term.
Yeah. It does. I would think so. To be totally honest, it seems like an extreme, maybe the biggest ever waste of human resources, both in terms of engineering talent and literal energy resources. We've got a whole bunch of comments in the chat here talking about the well, I don't know if it's more catered towards AI, but the spending on energy for crypto mining and all this stuff, it's to no benefit. It's for people to ultimately hoard. And yeah, if you are a government, especially if you're the US government, where you borrow in US dollars, it doesn't make a whole lot of sense to have this be like, But, you want that, you wanna keep that going. You want US dollar denominated debt. So, yeah, the threat to that is probably not good. So, yeah, I think it's an extreme waste of resources. I don't think China was necessarily in the wrong there. Yeah, with as to the gambling stuff, I think this week would have been a tough one for Charlie to watch.
Yeah, and for a lot of us here who are trying to help people be a little bit more rational and conservative with their personal finances. It's crazy how people will uh, they'll spend an hour like assessing whether a $200 purchase is, good or whether it's a waste of money for whatever the good is, but then with their their personal investing, all right, YOLO, we're done. We're just gonna go gamble on these options. It's quite strange, I think.
It's so yeah, it's
Feels toppy.
it does. And here's the thing, I'm not look, if someone made money on it, I'm not upset that they made money. That's
Well, people
great
make
for
money
them.
in Vegas all the time.
Yeah.
I can go to Vegas. I can do roulette 8 times in a row. Whatever the odds are, someone's gonna come out a millionaire.
Yeah, that's my point, is do you think you stop? Do you think like, "Oh, wow, I just 10x my money overnight. I'm done. That's it." No, you're like, eventually you redeploy it and get rug pulled because that's how these work. There's literally no built-in margin of safety whatsoever. Uh, and so, yeah, anyway, I we can go on and on about it. We do have a question here from Tyler that we should talk about. Any thoughts on the TikTok ban? It seems like Oracle could be liable to an $850 billion fine sometime in the next 5 years for allowing TikTok to run. Well, I'm not sure on the Oracle part, but
No, I could. Yeah, I mean the fines could be sizable. That's why they put them in. We'll see what happens. I don't know. When was that inauguration? 2 days ago. We'll see. Let it breathe over the next 90 days, and we'll figure things out. I, I don't know what's gonna happen. Ryan doesn't know what's gonna happen. I wouldn't invest based on any one of these things happening, but it's not like we can buy the stock anyways.
yeah, I will say if the idea look, people said it's a TikTok ban. It is
Yeah,
not a
it's true. It's
TikTok
not.
ban. It was a
Yeah.
forced sale, technically. They were saying you need to sell the business. Now, if they come in and say we cannot sell the business, that is because of exactly what's being accused here. It has to be. Like
I know.
if the concern is that the data is getting relayed to a foreign adversary, I think you can call them a foreign adversary, the and you're not willing to sell the business, why is that? Why can it not be a US run thing?
Yep. Yeah. I mean, hey, would you have allowed the Soviet Union to run one of the broadcast channels in the 1960s? No. So I think that kind of proves the point right there. Let's talk bubble watch though. We talked the coin, so I mean, let me just finish one of my weekly topic here. We could have gone the whole episode on this one, but I'll keep it short. Again, it's Brett's bubble watch, kind of tracking whether the animal spirits are back, some anecdotal evidence, and trying to have a good time. Our friend who has been on the show before, I think, but either way, good follow on Twitter. Does a lot of good work at I can never remember everyone's names. Fortune Financial Advisors. It's Lawrence Hamtil. And he tweeted, overheard some local teens at the gym comparing their Robinhood accounts, talking about Riz and making hella bread. I don't know what it means, but probably a contra signal of some kind. And someone responded and said, how does it feel to underperform your local teens? And he said, I cling to the Sharp ratio like a life raft. Yeah, I mean, that's we saw that back in college during one of the bubbles when you can see people's laptops open in class now. For people that are old, people are taking notes on laptops now instead of paper. And there's about 10 of the Robinhood accounts open and people are trading, pointing at things. Look, if 18-year-old dudes are doing all this stuff, that's a big bubble indicator because
Yeah.
we were them not too long ago,
Yeah. 100%. This is I've always thought that was kind of one of the leading indicators is what are 18-year-olds invested in? Okay, probably stray away from that. The the Riz, the hella bread, I mean, good for
Yeah.
these guys. I
I
don't
guess hopefully what's nice about it is either they're gonna make money or they're gonna lose money and they'll learn the right lessons early. You don't wanna learn these lessons when you're 45 and you think that you're a genius and then you blow up your family's retirement account. These people will be
yeah.
okay, I hope.
It's also look, you hear a lot about the success stories because it's fun to talk about. These
Right.
if when things go poorly, no one's broadcasting that. Like they kind of just probably stop talking about it. And that's
Yeah.
probably the indicator that things are not going so well anymore.
That's true, when they're not trying to teach you. Okay, I wanna get to some serious topics, but the other one I saw, I was making so when you put a video to YouTube, you can put some hashtags on it, to try to I guess they tag it almost for if people search your video, and since we were doing that Buffett and Munger unscripted one yesterday with Alex Morris, I wanted to put in a Warren Buffett hashtag. I'm gonna share the screen, Ryan, here. I don't know if you saw this, but
I think
I
I did.
was quite saddened to see this. The war on Warren Buffet has been lost. There are 81,000 videos with the hashtag Warren Buffet, Buffet, misspelling it. Again, that is buffet, like a lunch buffet, and only 59,000 with the proper spelling. Again, I think these bubble watch indicators this week we're at an all-time high, and the war fighting against the misspelling of Warren Buffett's name. We're losing right now, and we need some backup. We need some more troops.
Look, it's an honest mistake. I get it. But
I've
if
made
you're
it.
gonna
Yeah.
quote the guy, just take the 2 seconds to look it up on Google. Like, please. It's it's my first indication that this person has not studied Warren Buffett because it's such a common mistake that like someone as soon as I see the one T, I'm like they're using this quote poorly or
Yeah.
improperly.
And
Let's
then there's
talk.
always they give him, like, the meme with the chef hat. It's good stuff. Okay, we'll do the second half of the show, we'll have some more serious topics, but Ryan, do you wanna talk some of our sponsors as we're right around the halfway point here?
Yeah, the first one I'll mention here is Blue Chippers Club. Blue Chippers Club was recently started by two friends of ours with the goal of building a tight knit community of stock focused investors. Inside this community, everyone gets to share, break down their portfolios, pitch stocks, receive feedback, and participate in weekly calls. Obviously, optional if you want to join those weekly calls. Brett and I chip in or join on an occasion. And we also post a lot of our notes there, or I've been working to post more and more of our notes. So any ideas, kind of rough ideas we have, it's just a more tight knit community of stock focused investors. I really like that they're doing this. I recommend that you join if you're interested. It's totally free. So head on over to bluechippersclub.com and hit apply. The link will be in the description.
Okay. Any others? I guess we used the FinChat chart there on the show. That KPI was quite useful. That options trading one, it can really show why earnings are growing for a business, whether it's cyclical. The visualization can help a ton. Use our link finchat.io/chitchat and get a 15% off any paid plan. The link is in the show notes there as well. I guess I've been talking a lot, Ryan. Maybe we save Project Stargate for later. Do you have a topic? Maybe small cap of the week, and then we can talk the the biggest, I think, egos in the world competing over Project Stargate here.
Yeah, let's go small cap of the week first. So got a lot of recommendations from, I guess, listeners of the show. Can't get to all of them, unfortunately, but I really appreciate it. And thank you for sending these over because it makes my life a lot easier, especially if you provide a little bit of a pitch with it as well. But this is the small cap of the week presented by Yellow Brick Investing. We mention Yellow Brick all the time on here, but it is one of the best stock pitch aggregators on the internet. Pulls together stock pitches from fund letters, blogs, Twitter, podcasts, all into one place. So it's really just a nice single place to find new stock pitches.
I'd
Found
say it's
one.
the best by far. There's no other comes even close.
Yeah, I mean, yeah, it's a wonderful aggregator. And one of the ones that was pitched by a listener was Rev Group. Immediately looked up the ticker, REVG, on Yellowbrick and found a really high quality write up. And so here's kind of a business description. It says Rev Group is a US company that manufactures and distributes specialty vehicles and aftermarket components, focusing on two main areas: fire and emergency vehicles and RVs. So the majority of the business, both revenue and earnings wise, is specialty vehicles. So the like fire trucks and ambulances. They're actually a leading they're a market leader in both fire trucks, where they have 30% market share, and ambulances, where they have 50% market share. Here's a quote from the write up. It says, demand in this segment is steady, predictable, and largely inelastic because replacements are essential for municipalities when vehicles reach the end of their service life. Makes a lot of sense. I honestly did not. This is why I love doing the small cap of the week, because I had no idea this business even existed. Um, 80% of their earnings come from the emergency vehicles. The Brett sharing a chart here on earnings per share. They had a divestiture, so that's going to be pretty inflated. But if you go to operating income, it looks pretty solid. For a little bit of history on the business, the company began in 2006 when AIP, American Industrial Partners, was a U.S. private equity firm, started consolidating fire, ambulance, commercial vehicle businesses and manufacturers. And that private equity firm took the company public in 2017, but has been winding down. So they've been selling off their stake over the last couple of years. From what it looks like, also Alta Fox, I believe, owns a position here, which is e- a wonderful indicator, honestly, because I
For a
think they
small
do.
cap, they got a good track record.
Yeah,
They have quite the good track record.
they do a good job. The it looks kind of like a messy story where they've got this large conglomerate where it's been sort of pulling in these different manufacturers. Um, but the top line numbers and kind of the face value numbers are a bit misleading because they've got sort of this gem underneath the hood, which is the emergency vehicle business, where demand is very stable, right? I mean, you're going to have predictable demand because people have to replenish their ambulances and stuff like that at the end of the service life. And operating margins are hitting record highs at the moment. I think largely because it's turning more and more into this emergency vehicles business. The earnings multiple, as Brett showed there, it's going to be a little misleading. It looks like it's single digit, but that's because of the divestiture, I assume. EV to EBIT is roughly 18 times. Analysts, well, I should say analyst, because if you go to FinChat and go to the estimates page, I think there's one or two analysts
That's always a good indicator.
that
Always
cover the
good
stock.
indicator. Yeah.
Yeah, they expect EBIT to triple by 2027, which not sure how
I
they
wonder
get
why.
there,
Yeah.
but yeah, it kind of looks like potentially a hidden gem here, at least in the emergency vehicles business. I did not even think these are the kind of things that you just feel like you never even think about these types of manufacturers or providers. So it's always fun to take a look at. Any interest in the stock?
Yeah, maybe a bit. 18 times seems a little expensive for a company like this. I would be interested to see what their cash flow conversion is and then what their capital allocation policy is. Besides that, seems like yeah, I get the thesis that this is a reliable business that's going to be around and that you're always going to need. Yeah, nothing, nothing too crazy, but maybe one of those boring ones where if it's a good business and if it's run by a good management team, you can get really good returns, similar to an AutoZone. Maybe you're like, is it going to grow that much? Doesn't matter. We're gonna we're just gonna crush it on the capital returns front.
Yeah, I don't know if this maybe isn't my favorite small cap of the week that I've done, and maybe I need frankly, the story looks a little messy, so maybe I need to do more digging, but it is kind of one of those critical businesses where demand, I imagine, will be quite predictable. I'll mention one more time. It's Yellow Brick Investing. If you use joinyellowbrick.com/chit chat, you can get a discount on any paid plans. But yeah, go just anytime you hear someone pitches you a new stock, just go to joinyellowbrick.com, totally free. Type in the ticker, you'll find a good write up. Now, I know some people like to go 10K first, but yeah, sometimes it's nice to just get up to speed on a business quickly. Let's do we want to talk about Stargate?
The Stargate project, Ryan, let's do it. Did you hear about this? Do you know anything about it?
Okay, so I saw this morning that Masa-san was talking about investing $500 billion. I don't know if it's only him investing, not really sure how that works. Um, but I also watched the video where he was like giving a speech and Trump strong armed him into
Oh yeah,
doubling his
that
investment.
was that. I mean that was a while ago. Yeah, and he's back in his. I don't know. This is his wheelhouse. There's a boom happening, and he wants a part of it. For anyone that doesn't know, he's the chairman of SoftBank, a big investment company over in Japan that is not afraid to be aggressive. They're the ones that gave Adam Newman and WeWork, I think, maybe $5 billion. And he's talked about if what is it called, AGI, um, like general intelligence. I forget the exact term they have it, but essentially not just the chatbots, but really human like in replicating a human in in these AI tools. If it's true, then we should invest a ton of money. And he said that $9 trillion or something like that. There was just a number I think he threw out of a hat. Might be not enough because of the productivity that we're going to have here, which we'll see. But the first step might be this Stargate project. OpenAI essentially just announced it with a tweet. Um, I have a couple of quotes from it. We don't need to read the whole thing. Quote, the Stargate project is a new company which intends to invest $500 billion over the next 4 years building new AI infrastructure for OpenAI in the United States. We will begin deploying $100 billion immediately. Masa's son is the chairman of this company. It will be in Texas. So, Ryan, watch out. Electricity prices down there. Just fair warning. They could go up for you. Last quote here. As part of Stargate, Oracle, NVIDIA, and OpenAI will closely collaborate to build and operate this computing system. This builds on a deep collaboration between OpenAI and NVIDIA going back to 2016 and a newer partnership between OpenAI and Oracle. First thing, executive drama. Larry Ellison, I thought he was Elon Musk's guy. Now he's going to his arch nemesis, Sam Altman. I don't know. I don't know. Could be a breaking in the relationship there. What happened though after this announcement is again, the numbers are big. And you had the owner of Twitter next respond to, I think maybe it was Altman's tweet or maybe it was this one. Elon said, I don't know where they're getting this 100 billion or something like that. Like that number's not possible. And then Altman said that they basically said he wasn't telling the truth. There's the whole spat of whether the $100 billion is true. And then at Davos, which I guess is going on this week, Ryan, if you didn't know, um, Satya Nadella, the CEO of Microsoft, who's a part of this whole consortium, it's all complicated. Whatever, anything OpenAI is just ridiculously complicated financially, which I should say is a huge red flag. But Satya Nadella, CEO of Microsoft, is at Davos, and they asked where I think Andrew Ross Sorkin asked him where the $80 billion is coming, or excuse me, the $100 billion is coming from. As a side note, why do you have to go to Davos to talk to Andrew Ross Sorkin? I mean, it seems like a bunch of wasted resources, but whatever. They asked Satya Nadella, where's the $100 billion coming from? And Nadella just kind of responded, well, I'm good for my 80 billion. So I think Microsoft is going to be aggressive here. And we know, given their balance sheet, given how they're one of the biggest businesses in the world with over $100 billion in earnings every year, they can invest in us if they want. Now, the question is, where is the ROIC coming from? Ryan, do you have any thoughts on this? The number's staggering. Yeah, it's just kind of wild.
ROIC. Who cares about ROIC? So I guess the whole takeaway here is just buy the cloud providers.
Maybe,
If they're just
maybe.
working on quote AI infrastructure, does that just mean it ultimately culminates? I feel like everything just somehow culminates into either TSMC or the hyperscalers.
Well, Amazon and Google are not a part of this. So,
But could that investment in AI infrastructure, like, does that mean they end up relying on the cloud providers?
no, I'm saying it's going to be Microsoft and Oracle. It's not like Amazon and Google Cloud aren't a part of this at all.
I got a feeling somewhere in there they exist. Whether
Well,
it's
they exist in the industry, yes, but these companies are their competitors. They're not going to do any deals with Google at all. I mean, they're business like arch nemesis. These are their number one competitors.
I know, but they all still rely on each other. Even
I don't
like
OpenAI, I doubt uses anything Google.
really. Eh,
Yeah, I mean, before this, Microsoft was their only cloud provider. It
really.
was like, and now I think they're moving to Oracle. I think we have Masa-san. He's back in the driver's seat. Larry Ellison is back making speeches. These are the dot-com bubble guys, and they're back. And I think they kind of saw this and said, "W- you guys think there's a bubble? We'll show you a bubble, and we're going to just go absolutely crazy here. We'll see if the
All,
spending
yeah.
happens. I know one thing that's going to happen: consumer surplus. If it works, there's going to be a consumer surplus because we have artificial general intelligence. And if it all collapses, well, there's going to be a lot of excess computing, just like the telecom bubble. So either way, I think we can sit tight.
Well, the demand is limitless, Brett. That's what you don't
Yeah,
understand.
exactly. Yeah, yeah, yeah. Don't talk about numbers. I mean, yeah. All right,
It's
let's see.
so yeah. I just whenever this stuff comes up, I honestly don't know what to say. Like people, they can just throw around whatever number they want. Like I don't own Microsoft, so I don't own Nvidia. I don't own Oracle, so I really don't care. Like if this is a project, I will maybe care in the future. But for the time being, it seems to not impact my holdings at all.
Yeah, it's okay. You don't have to chase. Yeah, we don't have to chase those returns. You did mention TSMC though. They should benefit for sure. And that seems like stock's a little expensive now, but it seems like one of the safest plays out there. Not too expensive. Everyone relies on them. They're going to be fine regardless of whether the AI bubble is a thing or not. Yeah, good company. And the Arizona manufacturing plants are performing like up to their whatever specifications. It's working in Arizona. So
All right. I want to talk about the Switch 2, but before I do, we should mention one of our sponsors again, Public. If you're serious about investing, you need to know about public.com. That's where you can invest in everything: stocks, options, bonds, crypto. You can even earn some of the highest yields in the industry, like the 6% or higher yield you can lock in with a bond account. Public is a FINRA registered SIPC insured platform that takes your investments as seriously as you do. Fund your account in 5 minutes or less at public.com/chitchatstocks and get up to $10,000 when you transfer your old portfolio. That's public.com/chitchatstocks. Paid for by Public Investing. Full disclosures in the podcast description. Switch 2. Officially official. Brett, our
Yes, sir.
resident Nintendo follower, give us the updates.
Yeah, well, they said it's coming sometime in 2025. Typical Nintendo fashion. They just release things when they want to. Stocks up, I will say. I did buy some shares this week, last week. So, yes, I'm more bullish because of this. We saw that it's coming out in 2025. There are two important things, I think, for investors. First, it is not a radical redesign, it is an upgrade. Same form factor, which is a huge plus. We're not taking a big risk with a different form factor that Nintendo has done in the past, which sometimes works, sometimes doesn't. I think the form factor is not going to be a concern here. Second, let's see. Yeah, here's the quote. And this is from their official press release. Nintendo Switch 2 plays Nintendo Switch 2 exclusive games, as well as both physical and digital Nintendo Switch games. Certain Nintendo Switch games may not be supported or not fully be compatible. Details will be shared on Nintendo website at a later date. So that's the second thing, backwards compatibility. I think we are pretty darn close to having the thesis being fully confirmed. And what did Roaring Kitty say? I like the stock. I I I do like the stock here. What was my bold prediction for 2025? It finishes the year at $30 a share for the ADR higher. I would be more confident in that today, although, can't be uber confident in that happening. But yeah, I'm very bullish on Nintendo at the moment.
Is it I watched like part of the video of the release. Is it just bigger?
But yeah. Well,
Which is
this is what's
fine.
weird.
Not in a
People,
bad way. Like it's
yeah.
fine, but it's just bigger.
Yeah, I think it's gonna have better processing. It didn't really have any details. They just announced it was a thing.
Okay.
I'm sure it'll have better processing. I'm not really concerned about that. They're gonna sell games. They had essentially a mobile phone computer chip from 2013 powering the Nintendo Switch, and it sold well. So I'm not really worried about that. I'm just worried that, or I'm relieved that they're not taking a huge risk from a game style perspective and risking a Wii U situation, which there was no reason to think they would do that, but now we've confirmed that they're not. And I think even though the stock is up a ton, the de-risking from all of this makes it maybe even a better buy than it was 2 years ago.
You have been banging the drum here on Nintendo. So, and your prediction, if I'm not mistaken, if I read your writing correctly, you think they could do more than $5 billion in earnings in USD, $5 billion in earnings over the next, what was it, 5 years?
5 straight years. Once we get a full, give it a couple of quarters to ramp up unit sales, because it takes some time to get, into people's houses. So maybe after the first holiday season or something like that. Yeah, I think they
Okay.
could do it. Maybe if the yen keeps depreciating versus the US dollar, that could throw things into the mix, which I had no clue that the yen could depreciate this much. I thought Japan was one of the richest countries in the world, but whatever. I don't think, well, here's what I'll say. I don't think it'll depreciate as much as it has in the last few years over the next 5. And if that happens and the returns get obliterated because of that, well, let's just take a trip to Japan.
Okay. All right. Let's go. I, this pitch on Bumble, I want to talk about. You know what
Yeah.
else is kind of looking interesting is Grinder. I saw another pitch on that.
Yeah, and that one's been one of the best performers. What's yeah, it's actually
So
above
you're
its stock price.
you're
It's
back
up
in the dating apps as an investor. You are
as an
back.
investor. Yeah, yeah, no, I don't own any of these stocks. But yeah, Grinder I think is up in the last year or so, it's up like 3x. And the thesis there should have been simple. You have usually there's one side of the dating apps that generates most of the activity, which is the guys, and then you have both sides be guys. No wonder it's gonna be the network
Just a
effect's gonna be
cash
twice as
cow.
strong. Yeah.
Yeah. Yeah, for
But
sure.
okay, okay. The Tidefall pitch. So Tidefall is another good investor. They do a lot of public like pitches. They'll release some stuff, and their fund has done quite well. They've produced a 31% compound annual growth rate since inception. It's only been a few years, but they've been extremely good. Maybe I'll toss in a link in the chat, but essentially their thesis can be summed up with this quote they had at the end of their write up. At the time of our purchase, we bought Bumble for 6 times 2024 GAAP earnings or a 16% earnings yield. At that valuation, we didn't need to know how fast the company would grow, but rather how fast earnings would decline. That seemed like a far easier question to answer as we believe growth will actually continue. Bumble has net debt of $332 million, strong 8 times interest coverage on their debt, allowing for large potential share repurchases when management is confident on their trajectory. Bumble is also trading at a large discount to its peer Match Group. Although industry growth has slowed from its pandemic highs, we believe dating apps are in a far stronger position than the headlines and self reported surveys would suggest. With workplace romances increasingly taboo and Gen Z spending more time online than millennials, dating apps are likely to adapt and remain the most common way that new relationships are formed. Very succinct. I
I
like
like
it, but
it.
I'm still
Yeah.
probably not in.
I liked it. Yeah, I'm still a little skeptical as well. You know what this has been the biggest issue for me with dating apps. I want to like their business models. But what is causing where are the users going? That's what I don't get. So
Burnout, maybe? I don't
Tinder
know. Yeah.
usage has declined a lot. I mean, Hinge has grown, but it hasn't offset the Tinder decline. The everything, all the macro data shows that online dating is still like one of the most common ways people connect, relationships form. Like the population isn't declining, right? So like where are these users going?
I think it might have just been the pandemic bullwhip. Not sure. Not
Could be,
exactly
yeah.
sure. I think part of it is mismanagement from these companies. We've talked ad nauseum about how Tinder essentially wasn't updated for 10 years. Now they're finally starting to do that, but you got a lot of what do they call it? Tech debt? You work at a startup, right? Tech debt? You don't want that.
Yeah, I mean that's probably true.
Think if no one updated FinChat for 10 years, just didn't change.
And then
Like,
here's the thing that's yeah, this is the funny part, right? You've got like think about the evergreen and emerging. Now, I'm not a CTO. I'm not pushing code, but if you build a dating app today, I think I'm willing to bet the systems that you build it on, the APIs that you include, all that stuff looks starkly different than the system that Match.com runs on. So
yeah.
pooling those into one group and saying we're gonna learn leverage best practices from one another. I just don't think the synergies are really there the way Match Group claims they are.
Yeah. But now Bumble might be a different story. A
Yeah.
little cleaner from what they own. And did you hear? Let me confirm that with a quick Google search here. I think the founder, Whitney Wolf Herd, is back. Yeah, 5 days ago. CNBC. Bumble founder Whitney Wolf Herd to return as CEO. Hero's journey, Ryan.
Don't
We're
like that.
coming back full circle. She's gonna take these things out, and they had the classic stuff. The old CEO said retiring for personal reasons, blah blah blah. But she's the one that built this thing. Maybe she's the right person to get growth back.
I did not I did not particularly okay, growth maybe, but I didn't particularly think highly of her as a capital allocator. I
Yeah,
remember
or
like
ethics. Yeah,
yeah. I
yeah,
remember kind of looking
definitely
at
some
it thinking
concerns.
like, yeah, she could drive growth, but that's not necessarily the person I want stewarding the ship. And we think
But
about the
maybe
acquisition
today, maybe today the biggest problem is growth. So maybe today, maybe
potentially,
today's
yeah.
eater.
I mean, she was probably the one, I believe, pushing for that acquisition that they did, which seems to have been quite useless.
Oh yeah, fruity or something.
No, not even that one. The giant one they did pre-IPO.
Oh, Badoo.
Yeah.
Yeah, yeah, that
It
one did
just
die.
kinda I remember looking at that thinking, "Why on earth did you do this?" It felt like they kinda just wanted to be more of a conglomerate than just a single app.
Yeah, and the fruits one seemed to not do much. I'm getting a Google AI overview that says Fruits is a dating app that uses fruit emojis to help users express their intentions.
Shocking that that did not pan out. I,
Yeah,
for one, am very surprised.
didn't work, huh? All right,
Guess not.
but Bumble could work here. It's cheap. It's cheap, and if they buy back a lot of stock, it could work. They're good businesses. I get a lot of people that say they're bad businesses. I think they're the definition of a good business. The cash just comes in. It's something that's a durable need in society. I don't. I think there's ways to build moats and network effects and all that good stuff, but a lot of them have been mismanaged. The cash flow is there though.
Do you think these businesses are just ripe for mismanagement? Like dating apps are just
Maybe, maybe
drama infested?
kind of
Yeah.
like media companies, kind of like Disney and stuff like that.
Grinder might be the only pure play, and like you said, it's got the power users on both sides of the aisle.
Yeah, I say that respectfully, but it is true. Like it's you know,
Yeah.
we all know how it works.
Guys spend the majority of money on dating apps. I mean, they
Yeah.
drive revenue for those businesses. All right, we're kind of bumping up on time. Do we have any other topics we want to mention?
I don't think so. I think we had a lot of mine today. Anything else, Ryan? Did we forget anything? Teasers for next time. I know it's earnings season, so we can't talk about every earnings, but anything you're looking forward to discuss on next week to get people to listen again.
I still have to pick my stock. Well, we've got. I know you're going to be researching an airport, a Mexican airport, which will be quite interesting. Sticking with the Mexican theme there, and then I'm kind of
Bit
torn. I'm picking between either Vail Resorts or Adobe
ooh,
for my
two
next
good
stock
choices.
research report.
Yeah.
We'll see.
I think Vail Resorts. I've gotten a lot of interest from people on that.
Yeah, something about it's kind of like I, I just feel like I don't have any sort of differentiated view. I probably don't on Adobe
Well,
either,
that's what
but
the research is for.
I
That's what the
know, I
research is
know.
for, right?
I don't ski. Like if I skied, I'd be like all over it. I bet.
Maybe the skiers hate him. So
Yeah, I can't. I've heard that. I can't imagine that's a good thing.
no, I don't think so either. Maybe that shows that they've been mismanaged. Okay, but yeah, we got that. Some good research reports coming down the line. We're gonna do a investor overview on Mike Burry or Barry. Gonna be a fun one, and an interview at I think one of the most timely interviews we've had on Nvidia. Hopefully that won't mark the top, but it's gonna be a fun one. Talking the business, not really, you know, the stock or any day trading along that lines. It's someone who has, I think, two people that have owned the stock and appreciated multi-bagger returns on it. So we're gonna talk to them, see what we can learn from them. All right. Let's hit the disclosure. We are not financial advisors. Anything we say on this show is not formal advice or recommendation. Ryan, I, or any podcast guests may hold securities discussed in this podcast, may have held them in the past, and may buy, sell, or hold them in the future. Thank you, everyone, for tuning in to the live show. We do these every Wednesday at 1:30 p.m. Eastern Time on the Chit Chat Stocks podcast YouTube channel. So join if you want or listen to the recordings, and we'll see you next time. All right.